We're talking about house prices, affordability, and mortgage rates. And there's been a lot of talk out there about this massively slowing housing market. People are just not putting in offers anymore. People are not listing homes anymore. Is it exaggerated? No, it's not. When you actually start looking at the numbers, and the more and more people I talk to, the more and more we're amazed in seeing what the impact is on your cash flow. This is a good spot to point out important disclosures. The information in this video is for educational purposes. This is not specific financial planning or investment advice. In addition, everyone's tax situation is different. You should discuss your tax situation with a qualified tax advisor before implementing any planning strategy. So what I decided to do was to jump into the computer, head into the whiteboard, show you some examples of just what's happened in the last 6 months so you can get a clear idea of what we're dealing with. So without further ado, let's head on over there. All right, so since we're talking about homes and mortgages here today, we're going to talk about the affordability of a home. And if you've been watching anything in the news, you've seen how mortgage interest rates have really jumped this calendar year and over the past 12 months. Home prices are up, rents are up. So let's get to the bottom of what it actually costs to buy a home and how does that affect people now versus 6 months ago? Because rents are up if you look at things around 17 to 20% year over year. Housing prices nationally are up over 20% year over year. That's what I'm seeing. Mortgage rates up almost 30% or more over the past 6 to 9 months. It's really impacting affordability, which has created the most unaffordable home buying market in history, according to many prognosticators. So we're going to go over to one of my favorite sites. It's very easy to get this data, mortgagecalculator.org. Nice and easy to use. They put some information in here to start. Of course, I'm 20 minutes north of Baltimore, so they've got See Baltimore's rates in here. We're not really concerned with that. But what we're going to do is we're going to start with a $500,000 home. Not because I think that's what home prices should be, but just as a nice round number. It's easy to do these calculations. We're going to assume that we're going to put down 10% of the value of the home for a loan amount of $450,000. Now, 6 months ago, a year ago, you could get a mortgage around 3%. So we're going to start with that number. We're going to do property taxes of 1% of the value of the home. It might be more or less, but that's a nice, easy number. We're going to get rid of PMI. You may have primary mortgage insurance, but for the sake of this, we're going to get rid of that. And for homeowners insurance, just make it nice and easy, $100 a month, $1,200 a year. Okay, so we put this in here, we hit calculate, and last year at this time, on a $500,000 home with 10% down and a loan amount of $450,000 at 3%, you had a total monthly payment of $2,413.88. Okay, that's what it was. So, and this is the same whether it's a buy or a refi. This number is the same here. So, what about today? That same $500,000 home, if it was still priced the same way with 10% down, I saw recently that mortgage rates were quoted at 5.875. If I do that, keep everything else the same, hit calculate, watch this payment here, this total monthly payment right here, $2,413.88. Watch what happens. $30,178.59. Wow. That is a large increase, roughly 32%-ish on the value of that. That is a huge increase, and a lot of people out there can't afford to pay 32% more for a home. Okay? And of course, home prices are up, not down. Now, why do home prices and interest rates often have an inverse relationship? Often over time, now it's not true in shorter periods of time, but over time, if interest rates decline, home prices go up. And that's because as rates go down, you can afford a larger and larger house. Well, the converse is also true, although we haven't seen it too much in a while, is that when interest rates go up, you can afford less of a home, so typically home prices will come down. That's what I think may happen in the coming months and maybe even years. I'm not sure, but that's my thought process. So, let's take a look at this and say, okay, the previous monthly payment was just about $2,400 a month for that $500,000 home when it was 3%, right? So we change this back to 3%. That payment was $2,413. Let's see at 5.875 what the value of a home would be to get that same monthly payment of roughly $2,400. Let's drop this down to $450,000. Hit calculate. Payment's now $2,912. Let's go again. $400,000. Payment is now $2,646. Let's go again down to $350,000. $2,380. So that's roughly the same number per month that we had in that previous example. So basically, if you qualified for a mortgage payment of about $2,400 a month, you no longer can afford that $500,000 house, or $450,000, or $400,000. The max you qualify for is $350,000. So you are now out of the market for that $500,000 home, unless interest rates go down, mortgage rates go down, or the price of the home comes down. Something's got to give. And so the pressure on the buyer is immense now, because a lot of people just can't afford to pay these prices or won't pay these prices. So you're starting to see a dry up of potential buyers on the market. Now, there's a lot of people that own a home who might be thinking about moving up or moving or somewhere else or what have you. If they were to sell their home, they probably have a mortgage. It could be in the 2s or low 3s. And then they would have to buy their new home with a mortgage that's close to 6%. Who can do that? There's definitely some people who can, but for the majority of people out there, that is just a huge increase on top of all the other increases of things that we have today. Gas prices, things that we buy at the store, food prices. Go to Target and take a look at things. Target's generally a lower cost retailer. Take a look at how much things have increased there. So this is just another thing on top of that. And I really think that this is going to have a ripple effect through this housing market. I don't think people are going to just, panic sell their home or anything like that. They're just not going to sell, and they're not going to move. And that's going to reduce supply, but there's also not going to be any buyers. So it'll be interesting to see how this plays out, but I wanted to go through this exercise with you so you could really see quite easily the impact that these higher rates are having on homeowners being able to qualify for loans and what you're willing to pay. All right, now you've probably got a pretty good idea of just the massive increase in mortgage rates and what they potentially could do to housing prices. And that was just a $500,000 house. What if you're looking for one that's $800,000 or $1 million or $2 million, or you're looking for a vacation rental property? Well, guess what? Investor rates are even higher than that. So what is this going to do to the market? I really don't know, and anybody that does, I don't think they exist. So we're going to see how rates are impacted in the next 6 to 9 months. And a lot of this has to do with inflation and the Fed trying to combat that as we head toward the midterm elections. So I think what you're going to see is almost like a flat line of the real estate market. Unless somebody has to make a transaction, I just don't think home buyers are going to be buying homes. They're going to wait and see if they can get interest rates to come back down. And for a lot of people, they just can't afford the home that they want to be in. On the other side of things, if you want to sell a house to buy something else, you got to pay that huge increase in the mortgage rate. And I just don't think a lot of people are going to do that. So I think you might just see the housing market kind of freeze up at the moment, except at the fringes. And guess what? Movement at the fringes is what affects home prices. So if we see interest rates stay at these elevated levels, I think home prices are probably on the way down. We'll see. Thanks again for watching. Make sure you give this video a like, and if you have any personal experience with trying to get a mortgage right now or buying a home right now, would love to hear about it down in the comments. And make sure you check out this video next. Get clear, be clear.